Hi everybody, this is Lara with your end of the week video for the trading week ending Friday 17th of January for your gold analysis. I'm expecting a consolidation to continue and possibly to end on the 27th of January. I'm expecting it will find support about the lower edge of the Elliott channel on daily charts, and when it's done I'm expecting most likely an upward breakout. The upward breakout could be relatively brief and make a slight new high, finding resistance at the upper edge of the big best fit channel on weekly and daily charts. I do still have an alternate view which is very bearish, which looks at the possibility that a high is in place for gold, but it's an alternate. We should assume the trend remains the same until proven otherwise. This is the main wave count. This is the preferred wave count. It expects that gold is going to have one final high, at least slightly above this point, to end a double zigzag for supercycle wave B before a supercycle degree trend change in coming weeks. The structure begins here. Here's the first zigzag in the double. It's labelled cycle wave W. The double is joined by a corrective structure in the opposite direction labelled X. This subdivides as a regular contracting Elliott wave triangle. And the second zigzag in the double is looking now like an obvious three-wave structure, 535, labelled ABC, and C is close to completion. Importantly, for a bearish wave count from this low, this is the major low, I think this is the end of December 2015, to this high here, this upward movement fits best and subdivides very well as a zigzag, a three-wave structure, which would suggest that the bear market for gold is incomplete. When supercycle B may be complete, then supercycle C down would be expected to begin, which should take price reasonably below the end of A. So this is still a very bearish wave count for gold for the bigger picture. Let's take a look at the structure of cycle wave Y now at the daily chart level. We're going to look at the end of it. Here's primary A, this high here. Here's a zigzag for primary B, and the question is whether or not primary C is incomplete. I have this main wave count, and I also have an alternate looking at the possibility it could have been over up there. The main wave count expects the trend will remain the same until proven otherwise. Proven otherwise would be some very strong bearish movement and or a new low below this point by any amount at any time frame, because intermediate wave 4 of primary C may not move into intermediate wave 1 price territory. I am seeing for this wave count primary C as an incomplete 5-wave impulse labelled 1, 2, 3, 4, 5, and that sideways movement this week essentially is part of a consolidation for intermediate wave 4. If we accept that this first wave down here it's correctly labelled as a double zigzag, then we can eliminate a couple of possibilities for intermediate 4. We can eliminate a single zigzag, because this hasn't subdivided as a 5, it's a 3. We can also eliminate a combination for intermediate 4. So we're left now with two possibilities. It could either be a triangle or it could be a flat correction. For both of those possibilities, the A wave should subdivide as a 3, and a double zigzag is classified as a 3. This bearish wave count will look at the possibility that intermediate 4 could be a triangle. Let's take a look at this at the daily chart level. Actually, before we get there, just a note about the target. When intermediate 4 may be complete, then I can add to the target calculation at intermediate degree. At that stage, it may widen to a short small zone or it may change. The target will expect intermediate 5 to make at least a slight new high above 3 to avoid a truncation, but to not move much further above that. Okay, let's take a look now at the hourly chart level. We're going to look from the low labelled minor A, this point down here, and so minor A subdivides really well as a double zigzag, classified as a 3-wave structure, could have been over here, and now minor wave B is expected to move higher. If intermediate 4 is a triangle, as I'm labelling it here, then if minor A is a double zigzag, that means all of B, C, D and E may only be simple corrective structures, most likely zigzags. B can move beyond the start of A as in a running triangle. 40% of Elliott wave triangles will do that, and so it's most likely, 60% likely, to not do that. But it can. There is no upper invalidation point for this Elliott wave count at this stage. B should complete as a single zigzag subdividing A, B, C. C needs to complete as a 5-wave structure, most likely an impulse, and that looks like what it's beginning as. When minor B is complete, then another zigzag down for minor C. If it gets that low, should find support at the lower edge of the black channel I've copied over from the daily chart. Use that for support. And then D may not move beyond the end of B, and E may not move beyond the end of C. Also C may not move below the end of A. Overlapping sideways movement in an ever-decreasing range, possibly ending on the 27th of January, but it could even take a bit longer than that. We have to be quite patient with triangles. They are particularly time-consuming structures. Alternatively, this wave count is absolutely identical to the last wave count up to this point here, and now it's looking at the possibility that primary wave C could be over, and this does look like a really typical curved impulse, very typical for gold. 1, 2, 3, 4, 5 could have been over in here. 4 brief and shallow, 2 deep and time consuming. That is an absolutely typical impulsive look for this market. Typical behavior of commodities. They tend to exhibit swift, strong fifth waves, which forces the fourth wave coming just before to be very brief and shallow compared to their counterpart second waves. And they'll do it repeatedly. Again, intermediate 3 has a curved look, a more deep and time-consuming minor 2, a much more brief and shallow minor 4, and an explosive end to minor 5, an explosive end to intermediate 5. Because this has such a very typical look for this market, I will seriously consider this alternate wave count, but I want to see a new low by any amount, any time frame below this price point before I have any reasonable confidence in it. A new low below this price point would give full and final confidence in this very bearish wave count. At that stage, I would calculate a target for supercycle wave C for you, and it'll be reasonably below supercycle A. I'm not prepared to give you that very bearish target while this wave count is an alternate and I don't have reasonable confidence in it. I want to approach this in a very conservative manner, assume the trend remains the same until proven otherwise. At the weekly chart level, this is a very bullish wave count for gold, and if your own personal analysis leads to a more bullish outlook, you may choose to follow this wave count. But it is my judgment that it does not have as much support from classic technical analysis, and in terms of Elliott wave, it has a really big problem, and this is the big problem. If you have a bullish outlook for gold, this cannot be resolved, or at least I have been unable to resolve it. The first move up off a low for a new trend may only subdivide as a 5-wave structure. I've just shown you a really typical curved look for an impulse for gold. This does not look typical at all. It's normal for gold to have disproportionate fourth and second wave corrections, but only the other way round, where the fourth wave is brief and shallow and the second wave is deep and time consuming. In this example, the fourth wave covers a much greater distance in terms of price and is much more time consuming than its counterpart second wave. This is technically possible but highly unusual behavior for this particular market. That substantially reduces the probability of this wave count. But let's consider all possibilities. This is possible. It just has a lower probability. If cycle 1 is over here, then there's no problems with the structure of cycle 2. It fits nicely as a double combination, zigzag, X, flat correction for Y. Cycle 3 begins here. The target is for it to reach a common Fibonacci ratio to cycle 1. Cycle 3 may only subdivide as a 5-wave impulse. It could have 1, 2, 3, and 4 complete. It's possible 5 could be over here, but like for the bearish wave count, it could need a final high. The target remains the same. It's possible to label cycle 3 over here, and if that's the case, if cycle 4 has just begun, it may not move into cycle wave 1 price territory. This invalidation point is absolute. A new low by any amount at any time frame, a fraction of a cent on a tick chart, is enough to fully invalidate this wave count. At that stage, I will have only one wave count left, the bearish wave count. While price remains above this point, this bullish wave count remains valid, and we should consider it. Let's take a look at the daily chart from the high of primary 3. This point here, here's primary 4. Primary 5 may have so far 1, 2, 3, 4 could be continuing as a big flat correction, and then 5. At this stage though, the way I've labelled 4 on my bearish wave count as a possible triangle, I think has a better look. It would continue to see support at the lower edge of this adjusted Elliott channel, and for that reason I would prefer that version of intermediate 4. But this is a correction, and there are multiple corrective structures intermediate 4 could be. It could still be either a triangle or a flat, and we need to consider both possibilities. It's also possible, like for my alternate bearish wave count, to label cycle 3 over here, and the final fifth wave of primary 5 to end cycle 3 as a typical curved looking impulse for gold. Intermediate 4 may not move into intermediate wave 1 price territory below this price point. A new low below that point would see me label cycle 3 over at this high. I have two targets for cycle 3 to end. This is how I approach targets when I have multiple targets. If price gets up to the first target and the structure is incomplete, or price just keeps rising, then attention turns to the second next target. Let's take a look at a possible flat correction for intermediate 4, where minor A is this point here. Minor A, a double zigzag classified as a 3. That's correct for a wave of a flat. It has to subdivide as a 3. Minor B may now be continuing higher as a single zigzag. The minimum requirement for a flat is at this price point, where minor B would retrace 90% the length of minor A. As in an expanded flat, minor B could make a new price extreme beyond the start of A. When minor B is complete, minor C should move below the end of A. That would require now a substantial breach of the lower edge of this adjusted Elliott channel. That's okay, fourth waves aren't always contained within channels, but it would start to be disproportionate to its counterpart second wave. That's another reason why I don't think it's going to be a flat at this stage, possibly more likely a triangle, or maybe that alternate bearish wave count is actually correct. At the weekly chart level, there is some indication to consider the possibility that we could have a high in place for gold here. Volume in this week, 2 weeks ago, strongly pushed price lower within the week. There is bearish divergence between price and both RSI and stochastics. There's now some bullish divergence between price and on-balance volume. I'm actually going to give that less weight than this bearish divergence between price and RSI in conjunction with ADX reaching extreme. This upward trend reached extreme, and there at the final high exhibited some divergence. When that happens after RSI gets reasonably overbought, it's often, not always, but often a reasonably reliable indicator that you're going to have a big trend change, not just a consolidation. So I do want to seriously consider that alternate bearish wave count for gold, but I want to have a conservative approach, and I want price to give us some confidence in that wave count before I switch it to the main. This week, price is falling of its own weight. The long lower wick suggests some upward movement next week. Weak volume also suggests a wee little bit of upward movement next week. At the daily chart level, so far we're getting a consolidation. This fits with the main Elliott wave count that expects that we haven't had a trend change. We're just going to get a consolidation before a final high, and that is entirely possible. Volume is declining as price is moving sideways. That's a typical look for a consolidation. RSI could reach back up into overbought. For now, it's back into neutral territory. ADX indicates that the upward trend is now extreme, really close to very extreme. If it reaches above 45 and above both directional lines, then it's very extreme. ATR is declining as price moves sideways. That's very typical of a consolidation. Stochastics in neutral territory. MACD gives us a bearish crossover. The picture is a little uncertain for now. This could be a high in place, and this could just be a consolidation before a final high in place, or this could be the major high in place and we could be on a new downward trend. Declining range and declining volume for these sideways days suggests a little bit of weakness here, which would tend to possibly lead to the view that we may get one final high, and that main wave count, considering the behaviour of these last few candlesticks, could have some support there. That's all from me this week with your gold analysis. I hope that all of our members are having an absolutely fabulous weekend.